Can you provide an overview of the current state of oil and gas industry and its attractiveness to the investors at this point?
Yes, this is probably the biggest question that I get right now is, now that we've got a new administration that's taken office and Trump is talking about, drill, baby, drill. Obviously, if we're going to flood the markets with oil, prices are going to go down. So what is that outlook for, this next year, 2 years, 5 years, while we've got him in office? And I actually spent the entire week last week at NAPE in Houston, which is a huge oil and gas conference. And I was very fortunate enough to listen to Harold Hamm from Continental Resources and the governor of Wyoming and talk to a ton of different oil and gas operators, from small operators all the way up to the majors like EOG and Chevron and Exxon. And the majority of the operators, even though they're saying drill, baby, drill, they don't plan on ramping up their production.
This is the Real Estate Vibe Show, and I'm your host, Vinki Loomba. As a real estate investor and a fund manager, I'm always excited to explore the real estate opportunities with you and for you. Today, we have a very special guest, my good friend, Courtney Moeller, with me. I'm super excited to have you with me today, Courtney. Welcome to the Real Estate Vibe Show.
Oh, thank you so much for having me. This is such an honor. I love all of your different conversations and all the things you talk about, and it's just an honor to be here.
Thank you so much. So, a little bit about Courtney. Courtney is a US Navy veteran with #1 best-selling author who has leveraged her extensive background in oil and gas industry to become a dynamic international speaker and entrepreneur. With hands-on experience in investing, exploration, and drilling across multiple states, Courtney offers invaluable insights into the energy sector. And our topic for today is oil and gas investments, balancing risk and rewards. I think we all know a little bit that investing in oil and gas offers potential for substantial returns and tax benefits, but it comes with significant risk, such as market volatility and environmental concerns. Thorough due diligence is essential to balance these factors and make informed decisions. So today, we'll learn from Courtney, an oil and gas expert, on how to navigate this complex landscape and what to look for when investing in this sector. So Courtney, I'm going to start with this. Can you provide an overview of the current state of oil and gas industry and its attractiveness to the investors at this point?
Yes, this is probably the biggest question that I get right now is, now that we've got a new administration that's taken office and Trump is talking about, drill, baby, drill. Obviously, if we're going to flood the markets with oil, prices are going to go down. So what is that outlook for, this next year, 2 years, 5 years, while we've got him in office? And I actually spent the entire week last week at NAPE in Houston, which is a huge oil and gas conference. And I was very fortunate enough to listen to Harold Hamm from Continental Resources and the governor of Wyoming and talk to a ton of different oil and gas operators, from small operators all the way up to the majors like EOG and Chevron and Exxon. And the majority of the operators, even though they're saying drill, baby, drill, they don't plan on ramping up their production. And there's a couple of reasons for that. First of all, it's very capital intensive. So just because they're saying, okay, guys, you can go drill all you want. Well, a lot of these horizontal wells are 10 to $15 million a well to drill, and they don't have the capital to just go off and start drilling tons of wells. The other issue is that we have a lot of infrastructure that needs to be rebuilt and put into place. And so a lot of these operators are saying, look, instead of drill, baby, drill, we need to build, baby, build, and build on those infrastructures and get those things in place. And so one other key point that I really want to mention is we have not been doing the amount of exploration and drilling to keep up with the current demand of oil, and it hasn't been happening for years. So it is going to take 5 to 7 years for us to, if an increase over our regular production, to actually meet that gap. So we're in a really good, strong position for this next several years. I think we're going to see really strong oil and gas prices. And this is a really good time to get in and invest because eventually, when China comes back, they've kind of come online, their economy very slow since COVID has happened. They're not back at full force. Once that does happen, that's going to have a major impact on the increase of the price of oil. And so I think this is a really good time to invest because we're able to acquire some opportunities at a little bit cheaper prices with some potential higher upside, in oil and gas prices.
Thanks for sharing that. And then Drill Baby Drill. So what is that project? So can you give us a kind of sneak peek into that? I mean, what is Trump thinking about that? Is it like you wanted to bring everything in-house, drill more wells, and just everything is kind of in-house? So share some light on that, please.
Well, I mean, he thinks America should be energy efficient and supplying everything on their own, and that sounds great. We do not. We are the number one producers in the world at about 13 million barrels per day. The United States uses about 21 million barrels per day, just to give you some perspective, and the world as a whole uses about 103 million barrels per day, the entire world. So we actually import a massive amount of what we use because it is cheaper for us to import oil from other countries than to refine the oil that we are producing here in the United States. So we are not, I mean, even at peak production, I mean, we would have to ramp it up significantly to not need to import, from other countries. So it sounds good. But it would take a massive amount. 13 million barrels a day in production is a huge number, and to get to 21 would be crazy. I mean, I'm sure eventually we'll get there, but not anytime soon.
Yeah, and plus you need like more, I would say, the centers or the units to refine the oil too. Because I remember I was talking to somebody in, I think in one of the conferences when I went, and this person was saying that some of the oils, I'm not sure if their company does or a lot of people do, they send it like overseas to get it refined. Then it comes back, so it's like the cost goes up. So can you share
Right.
something as well?
Well, and this is where, a lot of the companies I talk to, they were like, look, we need to rebuild infrastructures. We need to build, baby, build, not drill, baby, drill. We need
Exactly.
our pipelines back online. We need to, our refineries that have, we need to rebuild refineries. We need to update the refineries that we have. We have a lot of infrastructure that needs to be done first.
So infrastructure needs to be in place before you start drilling more, because if you can't even handle all the oil refinement, I don't even know what else is involved in that. So it's not going to work out 100%. Thanks for sharing that. But with your knowledge, oh my God, this amazes me. I wanted to ask you, how did you get started in oil and gas, first of all?
Oh my gosh, that's such a great question. So, I am originally from Midland, Texas, which is the Permian Basin of West Texas. It is the number one oil and gas producing area in the United States. And my father was a petroleum engineer. My brother drilled oil. My uncle has a well servicing company. Pretty much my entire family has just been ingrained into oil and gas, and it's been a part of my life forever. We've lived in Abu Dhabi and drilled oil. We've drilled oil in Pakistan, and my dad drilled in Jakarta off the coast of Indonesia for about 20 years before he retired. And so, gosh, back in the 70s, he would put together deals in West Texas and go in and partner with Exxon and Texaco and Chevron and some of these major companies. And that company has continued on. And, we own several thousand mineral acres in West Texas. And so I kind of got grandfathered into what he built 50 years ago. And when I inherited his company 12 years ago, we've continued drilling with these major companies. And when I learned about syndication several years ago through an investment conference, I was blown away. And I thought I was going to syndicate real estate. And then I figured out really how special the tax benefits of oil and gas and what that means. And I thought, we really need to utilize the connections and what we have in place to bring this to other people because it pairs very well with real estate and other asset classes.
Oh, interesting. So you said tax benefits and other benefits. So let's talk about that a little bit. Everybody want to hear that.
Yes, so the tax benefits of a working interest in oil and gas, they're very special. They're unlike anything you see in any other asset class. And it was something that was written into the tax code, I think back in the 50s, to incentivize people to explore and drill new wells because we need oil for everything. It is in products, it's so much more than just gas in your car. It really does fuel the world. And so I'm sorry, I just started thinking about fueling the world and lost my train of thought. What was your original question?
My question was, let's talk about the benefits investing
Oh,
in
we were
oil and
talking
gas.
about tax. Yes, so the tax benefits. I'm sorry. This is you start thinking about other things and my brain goes in five directions. So it was something that was instilled, a long, long, long time ago. And the great thing about oil and gas investments, specifically working interests, is they have the ability to offset any type of income, active income, passive income, W-2 income, and capital gains. So you can have stock market capital gains, you can have capital gains from selling property, or even just need to offset your active income, and you get it just by making the investment. And every type of deal has different depreciation that they offer. So it really depends on what's going into what's called the intangible drilling costs. That's what gives you that special, W-2 or active income depreciation. And the intangible drilling costs are things like the fuel and the labor that go into drilling those wells. And like I said, depending on what goes into each project will kind of determine the percentage. We live in that 80 to 90% depreciation in year one, which we love because if you, let's say you invest $100,000 and it's an 85% depreciation, that means you're going to be able to reduce your taxable income by $85,000. And that's a significant savings. I mean, that translates, depending on what tax brackets you're into, roughly about $32,000 in actual dollars that you get to keep in your pocket. And so the intangible drillings are fantastic, but there's also something else called a depletion allowance, which means that you only pay taxes on 85% of the income on those wells for the life of them. Every year in perpetuity, you get that 15% depletion allowance year after year. And the other thing I want to point out is there is no recapture for taking these intangible costs. Those costs were received for actually drilling those wells, and you can't undrill the well. Once the money was spent to drill the wells, it was spent. So you don't have to worry about coming back and having that depreciation recaptured, 3, 5, 7 years down the road.
Interesting. So we wanted to mention over here recapture, like we see in the real estate, because we do the depreciation upfront, but when we exit the property, there might be some recapture over there because all the improvements that you did they do not have the exact timeline for to be depreciated by the end of the exit. So by the end of the deal. So in oil and gas, it's good to know that there is no recapture, first of all. So can you walk us through like one investment deal that you have done and then you exited successfully, and what did it look like for your investors?
Yeah, this is actually such a great question. So we do not have an exit plan. Most of the wells that we're drilling are going to produce for, 20 plus years. We are going to get the bulk of that income and production in that first, 7-ish years. And so it's very opposite of real estate in where, you invest in real estate and you get that quarterly cash flow and you see the majority of the upside when you divest, let's say 5 years down the road, where
Sure.
oil and gas is kind of really the opposite. And typically, and this also depends on what projects you're looking at and what their strategy is because they are all over the board. But we are looking to acquire projects that are going to return capital in a 12 to 24-month time frame. And really, the price of oil has a big impact on that and what the wells actually produce when they come online. But we're looking for return of capital in 12 to 24 months with a double, triple your money within that, 7-ish year time frame. And so when you get your money back that quickly, my personal strategy is to deploy the capital into oil and gas, get the depreciation, get my money back within a year or two, and then redeploy it into your, real estate deal, Vinky. And so now I've taken the same capital and it is now funded, two different opportunities for me in a relatively short time frame. And so that's the goal. We don't exit. I've got wells in my portfolio that were drilled back in the 70s. They're still producing today. And I don't ever want to get rid of them. If I've, 2x, 4x, 5x my money and I'm still, got mailbox money trickling in, they can send me a check for as long as those things are producing.
Yeah, I like that actually. It's always a high returns kind of investment. But what are the risks? Let's talk about that too, because whenever there's a high returns on an investment, there's high risk as well. So what are the primary risks associated with investing in oil and gas? Such as, we talked about that earlier when I was introducing you, market volatility, regulatory changes, or the environmental concerns. These are the, I think, few things that I can think of. So share with us, please.
Yeah, no, this is such a great question. And this is something I like to talk about all the time because I would say for me personally and our strategy and what we're doing, you're going to have the risk of drilling a dry hole. And
Mhm.
that is where you go out and drill and you get the tax benefits and there's no oil. That can happen in any project. And not only can you drill a dry hole, but you can actually have oil in that well and then not even be able to recover it out of the ground. So just because you find oil, I mean, typically if they found it, they'll find a way to get it out, but it does happen where they can't retrieve it. So that is always a possibility. The other thing is we are susceptible to the price of oil. We have no control over the price of oil. So the West Texas Intermediary, the WTI, is the oil price ticker that oil is sold on the markets here in the United States. And there's nothing we can do. There's a lot of global things that impact that. It's kind of like a stock price. And so we don't have any control. Obviously, the higher the price of oil, the more money we're going to make. So you always want to make sure you ask what the break-even price for a project you're investing in. And we live in kind of that $35 to $40 oil, range. If their break-even price is, $75 or something like that, we've been hanging out in the, $65 to $70 price range for quite some time. It's a really important number to know. So the price of oil can be an issue. Hitting oil can be an issue. And then once you're extracting that oil from the ground, how those wells actually end up performing, we can guess, but we never are going to know exactly how they're going to perform and what they're going to produce once they come online. So, and you do have environmental factors. A lot of what we are doing, I like to come into projects once they've already started drilling. So we've bypassed a lot of the risk, a lot of the potential permitting issues and things like that. So we have minimized a lot of it, but we are still susceptible to some of those other things, as are every single other oil and gas project out there. They're all susceptible to potentially drilling a dry hole. What is the price of oil going to be, and how much are those wells going to actually produce?
So if it's a dry hole, I think this is a question I get all the time too. Or I think about that too. So it's like you lose 100% just the depreciation, or there's some other things that you can look for. Because I know in the oil and gas too, there's multiple different ways you can invest. Like, for example, you could be just part of the real estate only, because there might be somebody else who's coming in and leasing the land from you and then trying to drill the wells there, right? And
Sure.
then it depends who you're investing with and how you're strategizing your investment. So if you can share with me, if are there any other ways we can recover the investment if there's a dry well or a dry hole?
Well, it really just depends on whether the project owns the minerals in a bunch of acreage. And if somebody else is going to come in and drill more wells, you could potentially recover some money that way. But typically you'll have to invest in the new well that's going to be drilled. So now in order to not have to contribute to that, that would be owning the minerals. There's not any tax benefits in owning the minerals, but if you own, let's say this, 1,000 square acreage of land and you own the mineral rights, any wells that get drilled on, whatever your ownership percentage is, you'll get that percentage of everything that is produced from those wells. So if you can get the minerals and the working interest, that's great. It's very difficult to do.
Earlier, you were talking about the global impact. So I was thinking about this question, how do the geopolitical events influence the oil and gas investment, especially today's date?
Yeah, absolutely. And this is what is very interesting. Typically when we have a Republican president, we do see lower numbers, but we
Uh-huh.
have so much more that is impacting what is going on. We've had over this last several years, we've had a lot of the European countries that have been moving away from natural gas and into renewable energy like solar and windmill. They are actually now saying, okay, this was really expensive. It's not doing what it needs. And they're actually getting rid of that and going back to natural gas, which is why it's a really optimal time for us to be ramping up our natural gas because they were forced to go and get that natural gas from Russia, and we will be able to provide that. We are one of the top, producers of natural gas. So, but you've got OPEC, you've got Saudi Arabia, you have a lot of these other countries, and actually, this is another risk that I didn't talk about a minute ago. But when you're in a working interest, you have monthly operating expenses that have to be maintained. And if your break even number, say it's $40 and the price drops below that, you now don't are not making enough money to cover those monthly expenses. So you're not only are you not making money, you're going to have to come out of pocket to cover that. Well, I had that happen to me in 2016 when sanctions were lifted on Iran, and Iran was able to kind of come in and flood the oil market. So lots of different things impact. Wars end up, driving prices up. You can have some countries, play games. I feel like it's like the stock market. You've got different big kind of market makers that can tweak some things that have major impacts. Fortunately, they won't typically not going to let the prices go down and just stay there because a lot of these countries overseas, they're very dependent on the price of oil. That is where and how their country makes money. So it's interesting. There's a lot of factors coming from a lot of different angles, but it is one of the top 10 industries in the world, not just in the United States, but in the world. And we all need oil and gas for energy, and it really does fuel the economy and the world.
I know, I like that, and I like it how you compare that with stock market. And we do know that there are movers in the stock market that move the stock market. So, what are the indicators or the key factors that moves the oil and gas? Since it's a global, I would say, issue, or at the global level, people are looking at oil and gas. So, what are the indicators that could tell us, okay, that's gonna dictate the oil and gas market going forward?
That is really tough, and I'll tell you, you have to be really careful with what you read in the news. Kind of going back to what I was saying earlier about, we produce 13 million barrels of oil a day, but we use 21. So there was an article I recently read, and they talked about, oh my gosh, we're the number one producers in the world. We're making so much oil, we're exporting, we're selling all our excess. And they didn't say selling excess, but the article read in a way that made you think, oh my gosh, we're producing so much, we're selling it to everybody else. Well, that's not accurate. We don't even produce, we're
Yeah.
almost a little more than half of what we actually need. We sell it because it's cheaper for us to import than what it is to refine what we have. But a lot of these articles and information is very misleading. So what I personally like to do is, Warren Buffett here recently decided to go hard and heavy into oil and gas. And so those big movers and shakers and, people that have impact, and I feel like they all kind of are in this like 1% of the 1% club, and they've got insight on things. When you've got Warren Buffett and big money like that, smart money moving heavily into certain sectors, that's a really big indicator to me. So I like to pay attention to where those big names are going and what they're doing over some of the articles and the other, noise that you see in that space. But I pay attention to what's going on overseas, what's going on with regulations and things like that, because it all has an impact.
I would like you to talk about that a little bit. Like you said, there was an article, you read the article, and it said, okay, we are selling, right? But in the article, I'm pretty sure it did not mention that they're selling the crude oil because you mentioned, right, it costs more to refine over here than it's cheaper to buy from outside. So if you can, share with us the dynamics there, how does that economics work?
So there are, and this is going to get a little more in depth into the actual, makeup of different oils. So different oil that's produced in different areas has different densities, different contents, and it costs different amounts to refine different types of oil, if that makes sense. And so a lot of what we have, so we have a lot of sweet crude, and like I said, this starts going beyond my scope of knowledge when you start really digging into this. But the cost can be very, very expensive. And like I said, we've had a lot of our refineries shut down, and a lot of our refineries cannot refine the types of oil that we have. It's got to be sent somewhere else, which is why it's cheaper for us to import from Canada and Mexico and other countries. And we can send our oil off. China used to be, a major importer of our oil. We'll see. It'll be very interesting to see what happens over the course of this next couple of years. I will be paying attention to all of it.
Yeah, the reason I asked you that question was because these articles can derail the investors. So my
Sure.
question in my mind is, how can I or the investors mitigate the effect of oil and gas price fluctuations for the investments? Because, all these articles, that's going to dictate, like in stock market, if somebody finds a stock and people start investing in that, the price is going to start going up. We saw that, right? That common people, they push the stock up, and there was a huge issue about that too. So that's the reason.
Yes.
Go ahead.
Yes, and I actually have a really good response to that. And so one of the things I want to bring up is if you take a look at the average price of oil over the last 5 years, even with COVID factored into that, the average price was about $70. If you take COVID out, I think it was like 74 or 75. So $70 oil is a really good number to kind of price your projects and returns out at. What does that look like? Are we going to have, numbers fluctuate up and below that? Absolutely, of course. And it's going to fluctuate and go up and down. We are going to have cycles. It's cyclical, just like real estate. And we are going to go back over $100. We are going to drop back down. It's going to happen. But the great thing is that the way that we invest in oil and gas, we are going in with major operators who have the majority of the skin in the game on these deals. They own 80 to 90% of these projects, and they are trying to optimize their income. And because of that, we reap the benefits and the rewards of it. And so if the price of oil goes down, they will slow up that oil production because you don't want to have your faucets turned on high when, oil is sitting down at $40, but you want to slow that, you want to slow it down to a drip. You don't want to turn it off, but you want to slow it down. And then if we've got, $120 oil, they can ramp those wells back up and, increase their production. So they are able to increase and decrease the production based on that. And like I said, the average price of oil is $70. It's going to fluctuate, and it's usually opposite of real estate, which is why I love to have both, because right now a lot of my multifamily has really been struggling, and oil has been pulling its weight. Eventually, we're going to get to a time where the prices of oil are going to go down and real estate's going to be really strong, and real estate's going to be carrying oil. And that's why I like to have a really healthy combination of both, because like I said, they pair very well together. And when real estate's struggling, the other one's doing strong, and back and forth. And we've got a nice influx of cash flow and divestors happening on both sides.
Oh, I like that. I really love that comparison, how you put it. Thank you so much for sharing that. And I love all the information that you've been sharing with us. Then, what I wanted to know from you is, if we wanted to start investing in oil and gas, like we were talking earlier a little bit, there's multiple different ways you can invest in oil and gas. Like I was saying, you can do the real estate only, or you can go with the people who have just
Yeah, well,
with
there's
the
stocks.
capital.
Yeah,
Yeah.
stocks and mineral rights and working interests. And so it really just kind of depends on what are your goals? What are you trying to achieve? And this is what I try to tell people, and I've made this mistake where I'm just like, oh, I like that investment. I like that one. And I'm just deploying cash. And, really your finances, you need a map just like you do on the road. And so you need a map. You need to figure that out. So you've got to figure out, do you need the tax benefits? Are you looking for cash flow? Are you looking for royalties? What is your goals? What are you trying to achieve? And that way you can figure out what type of investments you have. Figure out that end goal so you can create your map and then find the best type of investment. Talk with your CPA and see what's going to have a massive good impact on what you're trying to do and what you're trying to create.
And accordingly, you pick the investment where you wanted to invest in oil and gas. So let's talk about the due diligence now, because we do see a lot of investment deals and good deals, I would say. And thanks to you that I get to see a lot more than many others. So, now what are some of the essential factors should we, as an investor, examine during our due diligence process? For example, checking the track record of the operator, or knowing about the wells, or like the total landscape little bit. What are the important due diligence steps for an investor when they're
And this
looking
is
respectively? Yeah.
Yeah, this is a really great question. And I actually have two different due diligence checklists. I've got kind of my due diligence list for major operators and then for, small operators. And if I'm going to go in and partner with, Exxon or Chevron, I'm not going to do due diligence. I mean, these are multi-billion dollar publicly traded companies. And so I don't need to, perform due diligence on them. It's the small operators that I need to pull track records. I need to do background checks. I need to really figure out who I'm dealing with. So it differs. It really depends. And then the first thing I do is, make phone calls to other oil and gas operators to find out what they know about people and, what is their history with working with them been. And so those are my first things I do, pulling track records, pulling history, pulling experience. I want people that have decades of experience. They've drilled more than 1,000 wells. And I will tell you that drilling in the Permian Basin is different than drilling in the Niobrara and is different than drilling in the Bakken. And I want to work with people that specialize in those areas that we're in. And so I take a look at what they've done and what they've accomplished in the area that we're looking at drilling at. And then there's a couple of things I do. I mean, we could sit here and go through a ton of criteria, but make sure that people own the interest that they're actually trying to get you to invest in. Do they actually, if they're the operators, do they actually own the mineral interest? Do they own the mineral rights? All of this stuff is shared at the county, governmental level, and it's free information. So what I like to share is something, if we're investing directly into wells, there's something called a well bore it's a wellbore assignment. And it's just like real estate. It's recorded at the county level. It shows what we've purchased. And if it's specific wells, it'll have those wells listed by API number, which is kind of like a serial number for the well. So you can actually go in to the county level and verify that we actually purchased that interest. And then the great thing is every single state that's producing oil and gas has a governmental agency that regulates all of this oil and gas information. So for Texas, it's the Texas Railroad Commission. Wyoming, it's the Wyoming Oil and Gas Conservation Commission. You can go in and plug in those API numbers and actually see who is operating that well, who's drilling. You can get the permit information, the surveys that show where they're going to be, drilling and fracking if they are. I mean, all of it, all of the oil and gas that's produced is there, the depth of the wells, I mean, everything. So I provide the wellbore assignments and then I provide those links to that third-party agency so that people can actually go in and verify that we own it, and then they can verify the production as well.
Wow. Wow, I would say that's a really good information. It's just like, and then it simplifies a lot of things for the investors too. It tells you if you wanted to invest directly or you wanted to invest indirectly. So I think
Sure.
we did talk about that too, right? Or do you have anything else in mind that you wanted to share? Investing directly oil and gas and then investing indirectly to the stocks and bonds. What is the difference between the two, or how can you decide which is the best route for me?
Yeah, if you're just wanting to get your feet wet, I am not a stock market person. I feel like I call it the blackjack casino. You're putting your money in and it's a gamble. Are you going to win or are you going to lose? If you're making money, is your retirement going to be there when you retire, or are you now going to have to work 5 more years? It's just more of a gamble than what I am willing to go in. I might, like when COVID dropped, I did put some money in the stock market and we did really well. I mean, everything hit rock bottom real quick. And, we waited a little bit, made a little bit of money and got right back out. So it was a shorter term, play for me. But so it really is kind of dependent upon your risk tolerance and what you're comfortable with. I don't ever think anybody should go and invest in something that they don't understand, which is why I try really hard to make sure that my investors have the education that they need to feel confident in what they're investing in. So I think it just, like I said, it aligns with your goals and your tolerance level. I think we do a really good job of minimizing the risk as much as possible, and I'm really proud of that. So
Yeah, no, I agree with you 100%. It's very, very important for investors or for us as investors too, that we should consult the industry experts and also our financial
and
advisors or CP,
yes,
like you mentioned.
and that's exactly right. It doesn't matter what asset class you're in. Find the really good, reputable people that have been in that industry for a really long time, not the person that decided they were going to be a real estate expert 2 years ago. Find the people that have been involved in the industry because they know they're going to have connections and ties into that, and they know. So, I've got my certain people that I call for different things to find out, hey, what do you know about this person? I've had other oil and gas companies ask me to come raise for them. And I've got my 5 or 6 operators that I know that I call and say, hey, what do you know about this oil and gas company? And I find out that internal, industry information and insight from them before I ever do anything else moving forward. And that's very powerful.
Awesome. This is like awesome, awesome conversation. Love it. So share with me one golden nugget for my audience beside all the golden nuggets that you have shared earlier.
Oh my gosh, a golden nugget. I would say probably one of the biggest lessons that I learned in going to places is just because somebody is standing on a stage or sitting on a podcast doesn't mean that they are good people. You still need to do your research.
I love that. Thank you for saying that. I really, really love that. Thank you. It's very important, because this is like chasing the shiny object if you're not doing your due diligence right
Yes.
there. So this
Well,
brings, go ahead.
I was just going to say, I experienced it firsthand. I made that mistake firsthand. So I don't want to see other people make the same thing.
That's a very good advice. Thank you so much. So this brings us to our vibe rapid fire round. I'm going to
Oh,
ask 5 questions. You're going to answer it in one word or one sentence only. Are you ready?
I don't know. I'm nervous. My hands are sweating. Ready.
So first question, what is the most important thing that you've learned in your life and how did your life change after learning it?
Education.
I like that. Education is must, knowledge is good. And then using that education and knowledge is called wisdom. And that's what I think a lot of people kind of a little bit short on.
And
Share.
and non-traditional education, I think, and I know I was only supposed to say one word. I'm just going to throw one thing out there. We're taught and groomed to go to school and get a good job and do this. And there's so much more world and opportunity out there. Just tap into that education. There's so much free education out there.
That's so true. And that's the reason I was saying earlier, wisdom, how you use that information or how you use that knowledge is called wisdom. And that's very important, And next question I'm going to ask you, share one good book that you would like to recommend to my audience.
One of my favorites is The Gap in the Gain.
Oh, and by who? I didn't read that book.
I am totally drawing a blank. Hang on, I have it right here. Dan Sullivan. So I love this because it talks about there are positive things in every situation, whether they are good things or bad things. And it teaches you to kind of embrace things and look at things differently. And this was a really powerful book for me when I was going through some really difficult, hard times, because I feel like as successful entrepreneurs, we never want to admit the hard stuff and stand on stage and talk about our failures and the hard things. And I think there's actually a lot of wealth and wisdom and knowledge in those hard times. And that gap in the gain was really instrumental for helping me navigate some really hard times.
Yeah, it's good. And like I was talking earlier, before we started the recording, when you're in your low times, that's where the true you comes out.
Yeah.
And then that's very important because that's how you're going to reflect to the world. And world, whosoever, like, for example, your investors, they want to know all the good, the bad, the ugly, maybe 10 feet away, but they wanted to know everything. So it's like
Yes.
how truthful and how transparent you are. That's the name of the game. So in one word, what does life mean to you?
Oh, one word?
Yes.
Amazing. Life is amazing. I love life. I'm so grateful for life.
I love that answer. Thanks. So, what is your biggest passion?
Oh my gosh. I want to help the world. My biggest passion is impact. Impact on my kids, impact on my investors, impact on my friends. I was so small-minded when I started. I was trying to make a difference for my family, and then it was like, oh my gosh, I can do this for my friends, and oh my gosh, now let's go change the world. It's funny how things have grown and changed over a pretty short time frame.
I share that with you actually. Um, I'm on the same boat too, like to make a difference. So the last question, if you could turn back in time and talk to your younger self, what would you tell yourself and why?
Oh my gosh, I actually thought about this the other day. So, I hate that some of the things I learned them so much later in life. And if I could go back to my 20-year-old self, I would have them read What Would the Rockefellers Do? Probably the book I should have brought
I
up.
know.
Because in the beginning of that book, and I really suck at the rapid fire round. I can't stop talking. I'm sorry. But,
That's okay.
the Vanderbilts and the Rockefellers built a massive fortunes, and the Vanderbilts squandered it away, and the Rockefellers now to this day still have like 200 family members living off their family trust. And it really is about how you set things up, how you structure it, utilizing whole life insurance and investments and compounding wealth. And I wish I had been turned on to that 20 years ago, but it was so outside of the norm, and it's so weird and different. And if you're not going to college and doing what everybody else is doing, you're weird and not normal. And I wish I would have learned, I wish I would have had that book and learned all of these things, 28 years ago.
I know. I think it's all about creating the vision. And after that, just, having a set GPS system and then staying consistent and persistent with your efforts. It's just like
Yes.
some discipline is needed. It's not like that this way or that way. There's no this and that in life. It's just like you have to figure it out yourself. So how can people reach out to you, Courtney?
Oh, I have a website. It's CourtneyMoeller.com. And if you want to look a little more at the tax benefits, I've got an oil and gas report that talks a little bit about the 2025 economic outlook and the tax benefits, and you can get it at oilandgasreport.net.
Awesome. Thanks, Courtney. I really enjoyed our conversation today. Thanks for being on my podcast.
Oh, you ask amazing questions. Thank you for having me.
Thank you, everyone, for tuning in to the Real Estate Vibe Show. Don't forget to subscribe, leave a review, and share this episode with anyone looking to elevate their real estate investing game. Until next time, stay focused, stay inspired, and keep building your real estate vibe. Thanks again.